Okay, so let's talk about Rezolve, ticker symbol RZLV. It has been on an absolute roller coaster lately. And of course, the internet is buzzing with all sorts of theories. So in this explainer, we're going to cut right through that noise, dig into the actual data, and figure out what's really driving the price.
Yeah, I mean, look at this number. The stock has taken a massive hit, down about 58% recently. Now, a drop that big is always going to get people talking and, raise some serious concerns. But here's the interesting part. When you actually compare it to other speculative growth stocks in this market, Rezolve is, believe it or not, showing some relative strength.
So if you've been anywhere near financial social media lately, you've probably seen a ton of negative theories flying around. And a whole lot of that chatter is pointing its finger at one specific document, a recent SEC filing that many people believe is the single reason for this sharp decline.
But is that really the whole story? Is this one filing the smoking gun everyone thinks it is? Or are there other forces at play here? We are going to break down what's actually going on, and we're going to use the hard data to see the bigger, more complete picture. Okay, first up, let's tackle the document at the heart of all this drama, the prospectus. Just the word itself seems to be freaking a lot of people out.
For a lot of investors, the second they see the word prospectus, alarm bells start ringing. They immediately think dilution. The idea that a company is about to just flood the market with new shares, which of course could make their existing shares a whole lot less valuable. It's a common reaction, but is it the right one in this case? And this slide right here, this gets to the absolute core of the misunderstanding. The big fears about the company creating a flood of brand new shares and watering down everyone's investment. But the reality? It's way less dramatic. Rezolve is simply registering existing shares, all part of their recent Crown Peak acquisition. They're not creating new stock, this is just a standard procedural step. It's basically just a paperwork exercise, not some kind of panic button.
All right, so let's move on from the paperwork panic and actually follow the money. This is where things get really interesting, because we can see who is betting for Rezolve and who is betting against it.
Whoa, okay, now this number is a big deal. 22.18%. That's the percentage of all the shares available for public trading, the free float, that are currently being shorted. To put it simply, that means a huge chunk of the market is betting that the stock price is going to drop even more.
And if we dig into that a little deeper, we're talking about over 26 million shares being shorted. And that number, it's still growing. And the fact that it's actually cheap for these short sellers to borrow the shares, well, that tells you this isn't just a handful of traders. This is a pretty significant and organized bet against the company.
But just when you think you've got the story figured out, you look at the options market, and things get weird. I mean, on the surface, it looks crazy bullish. You've got 213,000 calls, those are bets the stock will go up, versus just 41,000 puts, which are bets it'll fall. So just looking at the sheer volume, you'd think the bulls are running the show, right?
But, and this is a huge but, this is where we find the real story. When you look beyond just the volume and you analyze the nature of these trades, the whole picture flips. Almost half, 48%, of all the options activity is actually bearish. It's a classic tug of war, with some really powerful forces on both sides.
Okay, so now it's super important to zoom out for a second. We have to remember that Rezolve doesn't exist in a vacuum. There are much larger market forces at play right now, and they're affecting a ton of stocks, especially in these growth and speculative sectors.
I mean, let's be real. The whole market is feeling the pressure. The Federal Reserve is making it clear they're not cutting interest rates anytime soon. The job market's just too strong for them to justify it. And on top of all that, it's the end of the quarter. So all the big funds are shuffling their decks, creating a ton of volatility. So all of this is like a major headwind for stocks like Rezolve.
So what have we got? We've got a filing that everyone misunderstood. We've got a massive battle between bulls and bears playing out in the data. And we've got a really tough market in the background. It's a lot of mixed signals, right? So what's the one thing everyone should be watching for next?
Well, everyone needs to circle January 13th on their calendar. That's the day of the company's next big investor call. This single event is being seen as the next huge catalyst, the thing that could finally give us some real answers about where things are headed.
So, really, it all boils down to this, doesn't it? The market is telling two completely different stories at the same time. The panic over that SEC filing looks way overblown. But those bearish bets, they are absolutely real. And now the company itself gets its turn to talk. Is that January 13th call going to be the thing that calms everyone down and sparks a recovery? Or is it going to confirm the market's worst fears? The data's given us the map, but Rezolve itself is about to tell us where the road goes next.